Good morning, afternoon, and evening, traders from around the world. I hope you've all had a fantastic week so far in week 50, and you're ready to rock and roll into week 51. First things first, we got to take a look at all of the big things going on this week, and this is the final week of the trading year for a lot of traders. And looking at the week, from a news perspective, there's not a whole lot. There's only one day. That would be Wednesday. All day on Wednesday, they've got the OPEC JMMC meetings going on at 8:30. Core retail sales and retail sales month over month. The forecast for those negative 0.2% and 0.2% respectively. So core retail sales 0.2. Retail sales negative 0.2. Flash manufacturing PMI coming out at 945, forecasted at 56. And then at 2 p.m., we have the FOMC economic projections, FOMC statements, and then at 2:30, FOMC press conferences. So Wednesday, huge day of news, but that's the only day of big news. Dropping back and looking at medium news announcements, Wednesday is the only day again. We're kind of seeing a little bit of a trend here. If traders are going to be coming in for a day of trading, it's going to be on Wednesday. Light news, we've got some on Tuesday, Wednesday, Thursday, and a little bit on Friday, but not much. The big day is going to be Wednesday as far as news. From a holiday perspective, there aren't any holidays going into this week, but obviously it's the week before some pretty big holidays, right? So Christmas Day around the corner on December 25th, that's next week, and a lot of traders will take the later portion of this week off, or if they're not taking the later portion of this week off, taking the entire week off, or what a lot of traders will do is approach the first 2 or 3 days, see how price action's going, and then judge it from there. The big thing going into this week is not just looking at how things are moving, but also keeping in mind all of the different factors going into this year. A lot of traders are coming into this year who are going to be staying home. They already have brokerage accounts because, well, they had to stay home earlier this year, right? They had to do something. And with that massive influx of day traders earlier in the year, it's not like they disappeared. Some of them, their accounts might have, but they're going to be able to come back a lot easier. So seeing volume going into the Christmas season, going into the holiday season, etc., it wouldn't be a surprise to see the next couple of weeks going into the end of the year to be pretty good. Maybe that's just being hopeful, but realistically, that's kind of something to keep in mind. Everybody's already got an account, so you'd kind of expect them to keep on, to keep on trading, especially while they're home and there's not really much else going on. Something to keep in mind. But with the fundamentals out of the way, now we can dig into some charts for week 51. That's going to be from 12/13 to 12/19. So the NASDAQ is up first, of course, and with the overall movement that we've got going on the NASDAQ, one of the big things that kind of stands out, I mean, aside from this gigantic bear bar here, is that after that bear bar, the market really didn't continue down. That's what a lot of sellers need to see. When you have a big flush and then nothing happens, a lot of traders start thinking, well, wait a minute, now this might actually be a situation of a washout and then a bounce back up again. So now that we're seeing some proof here and sellers just completely getting annihilated in terms of failure of continuation, any shorts who were underneath there have had more than enough opportunities to get some profit, break evens, etc. Now we're starting to gap up. Anybody who didn't get out, you can kind of feel that pressure, right? They're getting squeezed a little bit, which could potentially cause a move back to the upside. Obvious major objectives to the upside on the NASDAQ are going to be at the top of that big bear bar, just above 12,600. That's kind of where everything kicked off. A lot of times, looking at zones of support before those drops will also come into play, which was right here, a little bit lower, where we had a nice little base line of support just ahead of 12,600. So if buyers are able to work through these kind of swing highs, that's the next spot that you would expect to see, as my cat destroys my office, that's the next spot that you would expect to see a bit more continuation to the upside, right? That's where I want to see the buyers kicking in and trying to get the move going. And if they're not able to, then it's potential to start looking out below, because if the buyers can't get this going up, or if they do and then it immediately fails, all of the buyers who have been trying to hold the support down here, that's not going to bode well for them. That's when they start ducking out, getting out of the way, etc. Well, and there's not a whole lot left to hold up the market until starting to dip back down to the 11,800s. And that's kind of the last line of support, because if it dips below that, then there's not really anything until the 11,500s. And then if that breaks, there's nothing until 11,000. So you can see this is a pretty important zone. There's a lot of support here, but if this support can't hold, all of a sudden these wide open doors start spacing out, which allows the market to really start moving here. So if the buyers are going to hold it, this is going to be where they really need to get that job done. Switching gears over to the S&P, obviously a very similar look to how the NASDAQ looks. But, you know, again, we've got this really interesting scenario for the S&P that's kind of detached from the NASDAQ. With this bullish cycling to the upside, very nice bull cycling. And, you know, normally you'd expect to see the channel highs line up pretty well, nicely, and they really don't. The highs of the channel would be at the wick high, or maybe a little bit lower at the high opens, closes, etc. But those don't really line up either. It doesn't really line up until you come in a little bit closer to some of these inside swings, like here, there. Then things start to line up much more concisely. Now, usually that's an indication that this is beginning to be a midline. When you have that situation of a formation of a midline, the wider channel usually takes over, and that's where the top of this move comes into play. So measuring this out, just eyeballing it, you can see that if we adjust this just a little bit to actually, in my opinion, fit a bit better. Now we're explaining all of these bounces as well. That gives us almost a perfect midline. This, if we were to measure this out, that falls smack in the middle, right at 50%. So this is potentially creating some, you know, some options for the buyers. They have a way to kind of open things up. Obviously, we have a nice little weekend gap to the upside, and support's already come in off of the channel lows. There is one caveat, of course, if we look back at the previous major high, well, that's where we're having trouble. Now, this is the good thing. With this gap higher, we have this gap above that major zone of, well, it was resistance, now it's support. Because if it pulls back and we start seeing buyers supporting here, you can see a very clean and cut reason why buyers would want to come back in. And the fact that it gapped over that specifically is very important. It's not like it just, you know, this isn't just one of those gaps from a gap perspective. Like, oh, cool, it gapped. Hey, sweet. This is a lot more than that. It gapped over that level after it looked like it started failing. That's a massive potential squeeze chance, because now sellers who were thinking that this was going to rotate back down, they are underwater, and they opened up gap in underwater. That's a bad spot. So if it starts creeping back up again, don't be surprised to see the S&P racing back higher to try to fulfill some of those upside objectives. Next up on the list, we've got crude oil, and crude oil continues to just kind of grind its way higher. There are a few caveats going on with this continuation up. Obviously, we've got a lot of OPEC meetings and JMMC meetings and all of that stuff going on, which can throw these things for a loop. But realistically, that aside, if we look at the bigger picture here, we haven't really gone anywhere yet. From a bigger picture, what I love about the bulls for continuation is the fact that we've got this gigantic gap that still needs to get filled. And where is that gap? Right at $50. So the fact that that $50 mark is right there, first off, that's a huge psychological level. Second off, obviously it needs to fill the gap. And third off, there's a lot of potential longs who were probably buying into that bounce way back in February, trying to get the continuation up, and they've been dumped on ever since. This is finally their chance to get out of break even if they didn't utilize any of this price action. So there's a lot of things going on in this $50 to $55 range that could potentially create a bit of resistance. That said, we're creating a nice level of rising support. And if we're looking at this from a wedge perspective, we've got a nice ascending wedge, and there is a ton of room for further movement up. We've got to get through the 50s, obviously, but then 55s, even up into the upper 50s, you know, getting onto the 60s, start coming into play. And that's back up to where those earlier buyers potentially got stuck. So it's still looking nice and strong. And the fact that we have this overall movement, and let me get this wedge back on here. Now that we've got this overall movement to the upside and some really good, not necessarily proof per se, but at least a good bias to show that buyers want to go up, if we look backward and see what are some catalysts that may have caused this, it's fairly obvious. You remember when we were talking about it with some fairly good excitement, how we had this nice move, trapped underneath it, and then rotated right back up again. That continuation move to the upside, that's a really big catalyst. Shorts have been getting squeezed since way back here. So even if there is a pullback, it's still likely going to be sellers getting out of break even, buyers buying the dip, etc. There's not really any inclination that pullbacks are going to happen yet. We're still showing good continuation movement to the upside. There's still good strength to the upside. Everything is still showing really good continuation. Honestly, I think if it does give a pullback, it's going to be kind of one of those blessing in disguises to see a continuation back to the upside, because I'm not so sure it's going to pull back anymore. Next up, we've got gold, and gold is just kind of going... I mean, overall, it had a really nice rotation off the lows, but for the most part, we're still seeing this descending trend of sorts. Now, it could be a channel, it could be a wedge that tried breaking out, and now we're back on the inside of it. It could be a little bit of a wider channel. There's a lot of things that this gold formation could be. Generally, I like whenever there's a situation like that where there's a lot of things that it could be, I like looking at the most obvious terms to see what stands out. Because, well, when it's obvious, that usually means everybody else is going to be trading it. So there's some form of at least a little bit of reliability, even if it traps, to expect what's going to happen next. And given that overall movement, it makes a lot of sense to see the wedge. It's the most obvious thing. And from a support resistance standpoint, it's what's been showing the largest amount of respect. So given that amount of respect that's been coming in, and coupling that with the previous major bear bar move, right, that giant bear bar, we can kind of see what's going on. So we've faded outside of the lows of the wedge, and it was, so far at least, a failure. A lot of the sellers were likely looking for a continuation leg to the downside, and given how aggressively bullish this thing ramped up, any sellers right now are likely feeling pretty pressured. And if it does give a pullback, they're very likely going to be pretty happy to jump back in the opposite direction to get out of break-evens, potentially even reverse to try to look to bring this back up. Now, from that perspective, if the buyers are going to hold it, realistically, it shouldn't be breaking from the lows. So a swing buyer is going to be looking for a low probability, high reward, right? High ROI for a continuation back to the upside, where buyers are going to be buying into that pullback, assuming that sellers are going to be getting out of break even. And because it is an assumption, we don't know, we have to put the stops below the low. As far as upside objectives, right, then you're looking for potential 2-to-1 moves, 3-to-1 moves, etc., all the way back up. Lots of structural areas of interest to work off of that are fairly obvious, not to mention the psychological 2000. So there's a lot of zones that buyers are gunning for, and the major break point is this low. If it breaks below that low, then we've got some problems. A little bit of a trap or something like that, fine, that happens, right? Welcome to the markets. But realistically, it shouldn't be cracking that low by much. Next up, we've got the euro, and from the euro's perspective, it's looking very, very bull flaggy, the way that this thing is moving. We had a nice obvious continuation leg to the upside. Bulls just kept ramping this up. It looks like shorts got massively trapped. And now with this rotation higher, we're forming what appears to be a very nice, clean bull flag. We got a little bit of a break. And now with this weekend gap gapping back above, that's adding a ton of context for more continuation. Buyers are going to be really juiced up on any pullback that they can get to look for a continuation play back to the highs. Obviously, zooming out a little bit here, the euro has been incredibly bullish for a while, since early this year. And now that we're breaking back out, well, we saw what happened last time, right? We had this really, really strong consolidation. We broke out, consolidated, broke out, consolidated, and broke out. We're probably going to consolidate. So from this perspective, I wouldn't be surprised to see a little bit more continuation. But at the same time, I'm not necessarily falling in love with the upside because it's so far up here. If, the buyers give a little bit more of a pullback, then sure, I would love the long side a lot more. But where it stands, there's not a whole lot of room left before we start running into some major upside objectives, some targets, etc., that a lot of traders are going to be looking for and gunning for. And when we start hitting those areas, well, that's when a lot of the buying pressure kind of stops. And then we run into that same problem where we go sideways and start consolidating. And then we've kind of got to wait again. Likely there'll be a breakout, and At that point, we can make a judgment. But right now, I'm kind of expecting a little bit more up. We're probably going to go consolidated once again on the euro. And then finally, we've got the cryptocurrency side of things with Bitcoin. And man, oh man, is Bitcoin looking interesting. We had that gigantic flush in early November. And when it rotated back up, went a little bit sideways, trapped the lows, and now look where we're going again, right? Now, what I mean by trap the lows, we created this nice little wedge. And they had an attempt, right? Buyers tried breaking it. They failed. Beautiful breakout to the downside, got the trap. But when it came time for the sellers to rotate down again, what ended up happening? They got trapped and shut down immediately right back up again. So a lot of shorts are getting squeezed. And if they're getting squeezed, especially on something like Bitcoin, well, the natural assumption is continuation up. This looks like a fantastic looking pennant formation that's going on right now on Bitcoin for a continuation break to the upside. And I would love every piece of that going back up to the 20,000s, break above the 20,000s, finally get through that major area. And then maybe we can see this thing really start cracking higher, because then it's all-time highs going into the holiday season. There's a lot of things to love about that, right? That's definitely something on my radar. But right now, this little pennant formation that's forming on the 4-hour chart looks absolutely beautiful. And the fact that we can zoom in and look at all of the wicks, and all of those wicks are where? They're on the bottom. That shows that a lot of buyers are still very interested. So any move down on Bitcoin realistically, especially if it looks strong, is likely just a trap for the buyers to push right back in. That's an excuse for the sellers to get out of break even at this point. All right, well, that's going to do it. All right, well, that's going to do it for this week. This is going to be the final week going into the end of the year. Obviously, there'll still be some videos and things coming out, but as far as the weekly briefs and daily briefs and all of that fun stuff, just keep an eye on, if you start seeing a few less of them, well, that's because we're going into the holidays. So I will definitely try to keep some videos coming, but they might be on some different topics or training topics and a few things that might be more interesting on that perspective. So you guys still have some content to keep your eyes on, but as far as the briefings, there might not be very many of them until we start getting into next year. But with that in mind, I hope you guys have a fantastic holiday season. And as always, stay safe out there. Keep those stops in play. Let those winners run. I hope you have a fantastic rest of your week. I hope you have a fantastic holiday. And we will see you all back on some of the upcoming videos. Otherwise, though, in the new year. Enjoy. We'll talk to y'all later. Thanks.